Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 1st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get this on. Quite a bit going on in the markets actually today. We have total vehicle sales coming in across the board. GM down 15%, Ford down 7%, Fiat down 10%. Cummins missed on earnings. Luckily, I didn't play any of the earnings trades yesterday, so I was going to play Cummins and just decided late in the day that I wasn't going to play any of them. There just wasn't enough meat on the bone, so I kind of bypassed those. We do have earnings coming out later on today and tomorrow, some good ones. We have Apple coming out, Devon Energy, and Race. Ticker symbol Race is Ferrari. I'm not going to trade Ferrari. Bid ask is way too wide in that stock, so I'm probably going to be looking at Apple and maybe Devon and a couple of those. So under the overall markets, we've got crude oil down $1.50 almost, near the lows of the day right now. It's accelerating after we got below that 38 Fibonacci level there. The market really just started speeding up to the downside, really looking like a confirmation of a top here with yesterday's market action. Short-lived in the 50s, tried again today and failed. So overall market's looking pretty bearish in crude oil. Gold pushing up against the 61 fib level here. Really kind of can't get through that. It's a little bit of a flight to quality, I suppose, as the overall equities are still higher on the day, but we're getting some economic data that's not looking too good. As a matter of fact, I forgot to go over that because I started talking about the total vehicle sales. And we've got some manufacturing PMI coming out of Great Britain, came in better than expected. We also got the preliminary flash GDP in Europe, came in line with expectations at 0.6%, revised last month up a little bit. Here in the United States, we got some pretty important data. We got core PCE index, which is personal consumption expenditures, in line with expectations at 0.1%. But the real thing to really kind of look at here is we got personal spending came in line with expectations at 0.1%. They revised last month's number up slightly to 0.2%. Then we got personal income coming in at unchanged, was expected to increase by 0.4%, and then they revised last month's number down a little bit. So basically, personal spending is, keeping lockstep, and income, staying steady. So we got personal spending going up. I guess people are buying everything on credit cards. Not really great for the overall economy. And then we got our final manufacturing PMI in line with expectations, and the ISM PMI came in at 56.3, expected to be 56.4. Construction spending came in at negative 1.3, expected to be a positive 0.4, so a real wet blanket there. And prices paid spiked a little bit at 62, to 62. It was expected to be 56.5. So those numbers not looking as good as some of the earlier numbers in the week. It's kind of really reflective of what some of the economic data we saw coming out last week. So looking like it's a bit more fragile. We don't want to see manufacturing prices paid going up, especially when we're seeing personal income go down, because manufacturers are going to lay off those higher prices to the consumer. So if they have to pay up for different goods and services, and their income is not keeping pace with that, then that is not good. So just to keep that in mind. And then, like I mentioned, the total vehicle sales not looking so good. Gold futures moving a little bit higher. Bonds popping a little bit, almost up a full point on the day, up 27 ticks, really pushing up against that 50-day moving average. But at the end of the day, part of this could be due to the fact that the Fed has signaled that they are very close to neutral on increasing interest rates. This is kind of what I talked about at the beginning of the year. I thought they'd get up to about 1.25% and kind of hold off. They rallied up to 1.2, or they moved the rates up to 1.25 a little bit faster than I expected, but I don't really see them to move much higher at all. Onto the NASDAQ, it is up on the day, but as you can see, it is well off the highs of the overall day. We got E-mini S&P's similar situation where it's up, two ticks on the day. Actually, I don't know what happened to my Dow Jones, where my Dow Jones is, but here's the Dow Jones. Came very close to that 2,200 earlier today, right off the open. It's kind of given back a little bit, but up $76 on the day. But E-mini S&P's up 2 points on the day, and this is the breakdown of the E-mini S&P on a 30-minute chart. Not a whole lot to see here. As you can see, we're just kind of consolidating. Really, the market's kind of waiting to get all of these vehicle sales. They're coming in throughout the day, and the U.S. ones were not looking good. This is GM on their miss on their vehicle sales. No earnings here. We're not really seeing the overall market get more implied volatility in it, but the market just getting crushed with those vehicle sales numbers. Same with Ford, similar situation, down a couple of percentage points on their vehicle sales numbers. And CMI, this is they missed on earnings. They're down $11, over 6% right now. Luckily, I didn't play this because I was going to play this to the upside, and that would have definitely not worked out very well. It's probably also getting exacerbated to the downside based on these vehicle sales. They are not going to be producing a whole lot more, a lot of engines going forward if these other car manufacturers have a lot of inventory to get rid of. So keep that in mind for Cummins. Apple is one that I'm going to be playing later on today. It's probably one of those stocks that is going to play to the upside for me. So keep it in mind on Twitter at Wolfman's blog. Excuse me. Sorry about that. Anyway, so I'm going to be playing that to the upside for Apple. I was in the Apple store. There was yesterday. It was actually quite a few people in there. My son broke his phone, and we needed to go in there. And there was a lot of people in there, as there usually is. So, not looking to slack off any at all. All right, so that's about all I got for you guys today. Other than Friday's webinar is going to be on the long call butterfly. It's going to be great for a situation where, like Apple has done after that earnings kind of settle down. That's generally what they have a tendency to do, is move to a location, settle down a little bit, and we'll play it kind of like that. So check it out at protraderstrategies.com. And if you can't take that, take it easy.